In this video, I'm going to share with you how I lost just over $2,500 in just one day trading Forex. Recently on my channel, I've been sharing some videos of some great trading days where I have been making a lot of money. Well, I thought I would balance the scales a little bit with you today, guys, and share with you one of my darker days where I actually ended up losing just over $2,500. This isn't a normal day for me. This was an exceptionally bad trading day where I carried out some rather bad habits and I got emotional, and I'm going to talk to you about it all in this raw, honest video. And more importantly, I'm going to share with you some super tips for you to help you to avoid making the same mistakes that I made. I will divide this video into chapters and include the timestamps below, so if you want to jump to specific parts of the video, I'm going to start off with sharing with you my broker platform in MetaTrader 5. I'm going to be showing you real data. I'm going to show you in detail one of the losing trades that I took, and I'm also going to show you screenshots of the other losing trades. And then finally, we will go through some of those super top tips to help you avoid making the same mistakes as me. So if you want to jump to any particular part of the video, check out the timestamps below. And if you're new to my channel, hi, welcome. My name is Emily, and on Mindfully Trading, I share my journey as I grow and develop as a Forex trader. I originally started trading the US stock market around about 5 years ago when I started my training with Warrior Trading with Ross Cameron, and since then I have gravitated towards day trading Forex. I've actually been trading with a prop firm, the 5%ers. If you don't know what a prop firm is, it's where you trade a company's capital and you take a share of any profits that are made on the account. I've created a video with more detail about that, and I've got a link in the description below to the 5%ers if you want to check them out for yourselves. I'll talk to you about them a little bit more later in the video. And alongside trading Forex full-time, I'm also a full-time mother. I have 2 children under the age of 2. In fact, my youngest son I had just under 2 months ago. So let's just say that sleep is both a distant memory and a hopeful dream. So let's jump into the main content. Okay guys, here I am in MetaTrader 5 looking at all those nasty red rows. Doesn't it make you want to cry? Minus $2,500, that is around about minus 2.5% on this account. That is a painful day trading. In fact, that's probably the worst day I've ever done in this account. And this is what happens with trading. You can't avoid the losers. They do happen, but this isn't a normal losing day for me. These aren't normal losing trades. This is an exceptionally bad day where I carried out some exceptionally bad habits, and I'm going to explore exactly what those are later in this video. But first, let's look at this raw data. As you can see, I traded all 5 of my major pairs that are on my watch list this day. And this is Monday, the 6th of November. Monday, not the best day to push it. Now, I'm going to break down in detail this top trade here, Australian dollar, US dollar, because I think that this was probably one of the worst of the trades that I took. So there's a lot to learn from that. And after that, we will look through a screenshot of the other 4 trades so that you can see exactly what the trade was that I took and what didn't work. But before we do that, I have received a lot of questions asking about the 5%ers, the prop firm that I trade with. So I'm going to just show that to you now briefly just before we continue with the video. So this is their website, the 5%ers, and they offer multiple options for funding. They have the hyper growth program, which is 1 step, high stakes, which is 2 step, and boot camp. The program that I am currently enrolled into is high stakes. So what exactly is high stakes? Well, it's a challenge that you carry out if you are a consistently profitable trader. If you have a strategy that works, but you suffer with lack of capital, then this could be a really good option for you, because it's a option where you can enroll on the challenge, you can prove your skills. Once you pass the challenge, you get access to a fully funded account. So when you trade, you're trading their account and you take a split of the profits. Now with high stakes, you have unlimited time to pass, which is amazing. Really takes the pressure off trading. And they have multiple options as well for the account size. So you can start with $5,000 account, which is only $39 to carry out the challenge for. Or if you have a little bit more money to play with, you can spend $495 for a $100,000 account size. And it just means that if you pass and get access to that account, you're able to just make more money with that account. Now, using the $100,000 as an example here, there is an unlimited time for you to pass. So there's no pressure. You can take your time and you can take it one day at a time. You have to trade for at least 3 days. and make a profit, there's a maximum daily loss of 5% and a maximum overall loss on the account of 10%. So you can't make more than 10% loss on the account. Otherwise, you blow it up and you lose and you have to pay and start again. And the profit target to actually pass is 8%. Once you do that, respecting the rules and pass, you have to do it again in step 2, but the profit target is reduced to 5%. And then once you are able to do that again, you have access to a fully funded account with the 5%ers. Now, alongside that, the 5%ers are a brilliant platform, talking from experience here, because they offer a lot of support. They have a private Discord channel. They have a lot of training programs, workshops, webinars, that sort of thing in the dashboard. So you get access to all of that as well once you sign up for an account. If you want to find out some more information, I've got a link below in the description, so make sure you check that out. So here I am on my trading charting platform with TradingView. They are the company that I like to use. I've been using TradingView for over 4 years now. I basically started with them as soon as I started trading, and I've not looked back. They've been brilliant. They do have free and paid packages, so check out the link below in the description if you want to look at that. But we're looking here on the daily platform for Australian dollar, US dollar. And as you can see, I'm recording this today, Friday, the 10th of November. And basically, we opened here on the Monday, and all week we have been in a pullback. We have been dropping down. So is it no surprise to you that on the Monday, the first day of this pullback, when I took my massive red loss day, I went long because I was looking at this data. Last week we finished very strong. We'd had a range for some time. I've marked those levels here, and we had a really strong breakout on the Friday, and Monday I opened the charts. I was excited. I guess I had a little bit of FOMO because I felt like it's going to push up. We had momentum, it's moving. I didn't want to miss out on the move. A lot of that is fuel for my own personal experience at the moment, my circumstances as a mother, because I have missed quite a lot of nice trading opportunities, as you can imagine, because I've been busy looking after my boys. So as soon as I was on the charts on Monday, when I had that opportunity, I was like a trader with a machine gun, and I was shooting and trying to get all the trades instead of waiting for that sniper entry. So I already made the decision I was going to set a trade instead of just waiting to see what the market did. We'll talk more about that later. For now, let's have a look at what happened. So I've just used the bar replay tool to go back in time. So I've gone back to the London session on the Monday morning. As you can see, this was the nice push up we had on the Friday. I've got this vertical dotted line here that marks the end of Friday's trading, the start of Monday's. So when we opened up here on the Monday, we were mostly in this little bit of a range going sideways for the majority of the morning. Now I'm going to add some indicators on here, which is what I used on the day. So firstly, there's this daily high and low. This blue line marks the previous day's high. And as you can see, the majority of Monday morning, we were ranging underneath that high. I also added on round numbers above and below. That just marks institutional price levels, but they're not really relevant at the moment because we weren't near any, so I will remove that for now, just to keep the charts tidy. And what I did Monday morning when I was awake around about 5 in the morning, at some point when I was giving my little 2-month-old his morning feed, I went through my watch list and I added a series of trade alerts at the previous daily high and low, because that is the basis for my trade plan. Is I look for a cross of these levels and then I look for an entry. So when this pushed up, this candlestick here at 8:35 in the morning, that triggered my alert, and I looked at my phone and then I looked to get in for a long. So how did I calculate my long? Well, I used the Fibonacci retracement tool here, and I went from the low of the day because we'd been in this range. And from my point of view, we were breaking out, we pushed past this daily high, we closed above it. So I used the fib to set an entry here. From the body low, I dropped it at the high. And in these 3 levels, the optimum trade entry level, I planned my trade. So I set my entry for long at the top here of the 3 levels, which is the 62% retracement level on the fib. And I used a 10 pip stop, which was below this range. And for my target, I was basically just targeting a break of that, and I was looking for 1.5R. So price pushed down, it went into that fib level and it activated my order. Important to note here as well that I did do my weekly outlook. I had a look at the fundamentals, and for the most part, there wasn't any major news due out. So I wasn't taking any news into consideration. This was purely a technical analysis based trade. So it took a little bit of time to play out, and as you can see, it did chop about a little bit in this fib area. So we had a little pattern forming. We had a large momentum candle coming up here, and that would have been another reason for me to get long. So there was some valid reasons behind this trade, but in the end, it just didn't work out, and price dropped down. So that on its own, for me, I followed my trade plan. I had a break of the previous daily high. I had momentum. I used the fib. I made my forecast. I set my stop, my target. I followed my plan and it didn't work. And that is the nature of trading. You win some, you lose some, and that's fine. But where I actually went wrong this day, looking at the day as a whole, was firstly, I over traded. That is clear enough. I took 5 trades. Over trading is a bad habit by itself, so that was the first mistake I made, especially on a Monday. Mondays are the start of a new week and they can be choppy, especially if there's no news due out that day, because nobody really knows what the market's going to do. So to, in my opinion, push trading by over leveraging with so many open trades on a Monday, it's just not the best idea. In future, I've got to remember, I know this and I sort of forgot it on the day, so I'm telling myself and I'm sharing it with you guys, I've got to remember to just try and take one trade on a Monday. It's sort of like testing out the waters, seeing what it's like before you just dive all in when it's not actually clear what the market's going to do. So that was mistake number 1. Mistake number 2, and this is probably more specific to myself, is that I took this trade during the London session. It's not my usual session that I trade. Ironically, I'm here based in the UK, but I prefer to trade the New York session because I feel like that is the last major volume kick in for the day. We've had London, then it's New York, and I just prefer trading New York because I think from my experience I can sort of find it a little bit easier to connect with price, to sort of understand and make predictions on where it's going to go. I have been more profitable by trading New York. So why I set so many trades during the London session, I'm not entirely sure. Again, that's where FOMO comes in. And that leads me on to tip number 3, and that's trading psychology. Trading psychology is so important. It can literally make or break you as a trader. And this day, I just was not in the zone. It's really important to ask yourself, are you in the right mindset to trade today? I didn't do that to myself on the Monday because I was too busy trying to get a trade in quick. Fear of missing out, trying to get in there before I miss the opportunity. It's not a good way to trade. It's not a good foundation to make your trading decisions from. It's super important to be centered, to be focused, to be aware when you go into the markets, because it is a battlefield and you've got to have your wits about you. Personally, I was probably just working from a place of extreme tiredness because obviously I have got a newborn baby. I'm up a lot in the night and it's hard to make sound decisions when you are that tired. I should probably have a break, but it's hard to switch off when you love trading so much. Another tip, and it kind of did present itself here, but I'll share this tip regardless, and that is to wait for clear momentum. And that is, again, specific to my trade plan, but I think it can really help you if you are a day trader or a scalper, because momentum is what can really help push a directional bias. So if you're waiting for a long or a short, it can be helpful to wait for a strong momentum to give you confirmation before you get in. I thought I had that here when it pushed up above this daily high, but that was when I set my order after the push up. I didn't wait to see what the reaction would be. And if I had stepped back and looked at the market as a whole instead of what I wanted to see, I wanted to see a breakout of the daily high. I wanted to get long and I got in. But if I'd have waited, I would have noticed that we had a push up, it stopped, and we had an equal push down. It came down, we tried to push up again, but we had another strong push down. This is like a battle going on here of momentum, and in the end, the bears won. And I wasn't actually in this trade at this point, so if I'd have noticed this pattern before I got in, I could have saved this loser. And finally, another top tip to share with you to help you avoid losing trades, or to help you avoid such a big losing day like I did, is to manage risk. It goes without saying that risk management is So important in trading. Although I've had a huge red day here, it has helped by the fact that I had reduced my risk. I usually risk 1% per trade, but I'd halved that, so this could have been a lot worse. It's still a bad day for me, but it could have been a lot worse. And I'm just going to hop through some screenshots here. I always do a screenshot of my trade from TradingView for my reviewing as part of my reflection for learning and growing, and that's another tip to share with you guys if you don't do that already. It's that easy to do. Just basically do print screen. I save it into Paint, free and easy, save it onto the computer, and I can look back at it later. So this is an image screenshot of the one I've just gone through with you for Australian dollar, US dollar. Another losing trade I had, Euro USD, and they're all the same idea, guys. Again, it's the same concept. We had a big push up Friday. I was looking for a break of this daily high, which we got, but what do you see here? I see a very poor quality trade because there's no clear momentum. Price just kind of pushed up above the previous daily high quite effortlessly, and then it came down. There's no strong push up. So if I'd have noticed that sign, I probably would have waited before I got long, and I would have been able to see that actually this wasn't a valid trade at all. And then here's my losing trade for pound dollar, and that's the other mistake. Again, over leveraging. I was long Euro USD. I then went long pound dollar. That's not a good idea because they tend to follow each other up. So if one's going to lose, the other one's likely to lose as well. And it was a Monday. So I should have noticed all these signs and just waited and been a little bit more conservative with my trading decisions. USD CAD was another losing trade I took on the Monday. And this is where I was looking for a short. The same concept, but in the other way around. We broke the previous daily low from the Friday. Now this one I did think it had a little bit more credence about it because we consolidated and we had a nice drop down, and I used this fib to get in short, but it just didn't work out. And then finally I had the same idea for a short on USD Swiss. Again, over leveraging, I was short one USD pair already, so going short on another one, it's just not a wise decision. So I'm not proud of this day at all, but I'm hoping that by sharing this with you, sharing the mistakes I've made, it may help you to avoid making the same mistakes as me. And to be honest, it helps for me to share this with you for my own growth because you guys hold me accountable, and for me to recap this painful day helps for me to really learn and try to remember it so I don't make the same mistakes again. Next week, I am going to aim to share with you guys a great video which will be 6 resources that I use for trading. This includes both free and paid platforms, but there will be some special coupons coming out because Black Friday is coming up. So make sure you subscribe to the channel below with that notification bell ticked so that you're notified when that video is released. All of the software I've used in this video will be linked in the description below, so check that out. And if you've enjoyed this video, please let me know by hitting that like button, and I will catch you in my next video. Thanks for watching. Bye.